Hello, Namaste. This is Neeraj here, and welcome back to my channel, Neeraj Stock Analyst. Since last 2 days, I have got many of these queries and inquiries and mails regarding what to do with the Adani Enterprises stock and the recently continuing its FPO share sale offer. Now, let us just I would give point by point clarifications regarding this company and valuation and group, and regarding the Hindenburg research report also. So the all controversy has erupted because Hindenburg American Research, Equity Research and Short Selling Institute company investment banker has come out with a report 2-3 days before that there is a lot of management fraud and accounting fraud going on in the Adani group of companies and in Adani Enterprises. Adani Enterprises is the holding company of most of this Adani group companies which are listed and unlisted. So I would try to give the point by point clarifications regarding the main points raised in this Hindenburg research. First is that it is a very highly leveraged group and a highly leveraged company. So it's around 81,000 crores or 810 billion rupees of debt on the group level, and on Adani Enterprises on the company level it is around 420 billion rupees, 42,000 crores. $8 billion of debt. So if you look at any infrastructure company, you will find that the infrastructure and the capex growth company has to take the loan, and it's generally you will find that it is debt and leverage is there. But so this is a common thing. It's not something you can say very bad, but there is always a risk of leverage is there. So within that, if that parameter, it is not some very big alarming situation. Now the second point is that there is a lot of accounting fraud and is happening, and that valuation. So regarding that, I would just figure out some of the figures from the latest balance sheet and the latest quarterly results. So as of the March 2022, 31st March balance sheet, the Adani Group, Adani Enterprises has cash of 18 billion rupees and debt of 420 billion approximately rupees. And if you look at the net worth, it comes to the 200 rupees. But there is one intangibles. Intangibles is grown very big. It's around 13 billion, and there is no description of what is this intangible. So there is one negative point in the report. There is nothing what is intangibles consist of. So it's little a doubtful question. So if you remove that intangibles of 13 billion rupees, then the net worth or the book value comes to 170 rupees only of this stock, Adani Enterprises. Now, if you look at the latest Q2 results, that is September ended result, because it's December ended results will come on Tuesday, on 31st. So if you look at the half year results of FY23, it had made a revenue of 760 billion rupees and EBITDA of 36 billion, 3,600 crores, and PAT, net profit, it made 9.3 billion, means 9,300 crores. So EPS of 8.2 rupees. Now if you annualize it for the full year, it will come to be the EPS of 16 rupees. And this is already showing a 50% growth as compared to the FY21, 1 year before report. So if you look at the valuation itself, on 16 rupees EPS, and again if you take that, it will continue to keep on growing at 50%, which is not possible for any company to grow indefinitely. But still, assuming the best of the best case scenario, optimistic scenario, it is trading at something like 200 times its EPS. Or if you on EBITDA basis, it is trading at around 45 times EBITDA, which is insane, which is just a bubble. Normal infrastructure company, because of its very highly irregular income and very highly volatility in the income fluctuation, it gets lower multiples as compared to the other companies. But even continuing to believe in that valuation which I have discussed in my last video also, my unique magic valuation method, that whatever the growth percentage of the earnings, you take it as a P, and what is the future EPS, 1 year forward EPS, you multiply, that should be the target price. So taking this also, 16 rupees or 17 rupees EPS for the next year and multiply it by 50, it should not be more than 850 rupees of the price of this Adani Enterprises stock. And even on EV/EBITDA, taking it, because it takes into consideration the debt, so that is also a good way of valuating rather than P. So on that basis also, if I'll take it as it will make a, say, 45 billion rupees. So that way also, and multiply it by, say, 40 times EV/EBITDA. Okay, so still it will not be more than 1000 rupees. On best case scenario also, this stock cannot be valued. This is also insane kind of valuation parameters, verticals we are talking about. Now the third point was that management and accounting fraud. The main reason is looking into this is that you look at the shareholders pattern. They have not given the details of the shareholder pattern in their balance sheet. That is not a good practice. Generally, every company gives. And what I found was that there are 3 foreign FII, LTS, Elara opportunities, and Nomura. If you look at the history of these 3 funds, they are not good in terms of, their reputation is not considered to be very good. I am coming from this investment banking and stock analyst background. I have worked with this kind of thing, and they are very doubtful FII. Means it has been used by promoters to pump in money into their own stock. This has been a very usual practice with this. Other than that, no good FII or even mutual funds will be investing into this, because it's a nifty stock. So they have to invest into the index based fund. So that is why they have to, as per the norms, just they have to, but any other than that, no mutual fund or good funds. So that also raises doubt about the credibility of this FII. It shows that maybe this is their own money or promoters' money through some other vehicles it has come into and pumped. So it's a classic pumped and dumped. So if you look at this kind of a portfolio into, and also their debt, another third point is that debt should be given, the breakup of debt, what they have taken loan from, which banks and which institution, that is also missing from the balance sheet and annual report. So that is also the third point which raises the doubt about the credibility of the annual report and this management. So I just wanted to say that yes, it is a valuation bubble. It is going to burst, and there is a literally downside potential of 50% minimum from the current level also. So better avoid this stock and don't get into the FPO. That's it from my side.